Craig Tashkin at Fairway Independent Mortgage, and what you're looking at here is a rent versus own analysis. Many people are thinking of purchasing, but they're wondering about the expense of purchasing versus renting over the short and long term. Many people are holding off on their decisions because they don't think they have a great enough down payment, or they think it's too expensive to own. But here's another twist on how to look at that and how to analyze the numbers. So let's say in column 1 here is your current rent, and let's say you're paying $2,000 or close to $2,000 a month in your rent, and you pay $30 a month towards insurance on your belongings on the interior of your apartment. And I started here at a $500,000 price and then went down from there, just to kind of show you some different numbers. If you put 10% down, the loan amount's going to be $450. Interest rates are right around 4% and 0 points for a 30-year fixed. This payment here is your mortgage, tax, insurance, and PMI, private mortgage insurance that you would have. Now, of course, on a gross basis, this payment is much greater than your rent payment. But if you look further, here's a example of what the tax benefit could be. And actually, I've used a conservative number here. Yours might be actually greater depending on your tax bracket. But the tax benefit, you do have the interest deduction, and the property taxes are tax deductible. So you'd file a Schedule A to itemize your deductions and get the full benefit that you can. And this here is the principal pay down. Part of your payment is not just going towards interest, but paying the principal down, which is gaining equity in the property and increasing your net worth. And so you're paying back yourself, basically. So the net payment after you figure in those benefits is around $2,000, a little less than $2,000. So very similar, to your rent that you might be paying right now. And if you go down to $450, carry the numbers down, same thing. About $2,600 a month payment. Same with the deductions. A net payment of around $1,826, $1,830 per month. One thing I forgot to point out here is, in these examples, the cash to close that you would need for the down payment plus closing costs and other related prepaid expenses, around $58,000 and $53,000 in this example. And if you keep going down on the $400,000, you'll see the numbers here. The net payments look better, of course, here because of the lower price point, lower loan amount. Cash to close is lower as well, under $50,000 in terms of cash to close. If you click on the More Info tab, that gets you to this back section, so you can see the payment breakdown, the principal and interest on each property, the property taxes that I use, the insurance that I use, and the PMI. These numbers can change up or down depending on your individual qualification, what towns you're looking in, that kind of thing. So we can do an individual analysis for you. So closing costs, you can look at the fee detail here. This gives you the line-by-line breakdown of all the different costs involved in getting a loan, so you can take a look at those at your leisure. And then the other thing to point out here is, if you look at it from an investment standpoint, let's say you had $60,000 in savings or investments, combined savings and investments. If you were to invest that money, continue to rent and invest that money in the stock market, or let's say even bank accounts, and let's say you're getting an average return of 5%, that's going to be worth in 10 years, roughly a little under $100,000. So that's not bad. But if you look at what your net worth would be after 10 years, when you figure in a modest appreciation of the property, I think I plugged in 2% for appreciation, the pay down of your loan, so that difference is your net worth, a much greater net worth in terms of owning. And then you have the pride of ownership. You don't have to worry about getting evicted from your apartment, like if the landlord sells, or your rent continuing to go up, where your mortgage payment will be steady. So if you'd like to look at this in more detail and have further questions, please feel free to give me a call. Thank you.